Well, Meta stock down 20% in pre-market. Today we're going to have a look at what happened and why this is down 20%, and also if this is now a buying opportunity into Meta stock. So hope you enjoyed the video, guys. Smash that like button. If you're new around here, subscribe, and we'll have a look at what's going on with Meta stock and why it's crashing so much. So right now in pre-market, it's actually down 21%. It's just dropped a little bit more, believe it or not, right now. And that means it's going to actually open up $101. We could actually see today Meta maybe creep into double figures today, which is unbelievable to think a year ago that we would see this go from a 52-week high of $353 down into the double digit range. And that also means that Meta is now going to be at the same sort of share price it was at. Hold on, we need to go even further back here. The same sort of share price it was in 2017. In fact, it was nearly even 2016. So yeah, Meta has had 6 years of share price appreciation wiped off the company after today, which is absolutely insane. And unfortunately, the writing was on the wall a little bit after Google's earnings. We talked about Google yesterday and I saw their numbers, another company that heavily relies on advertising, and their numbers, you went, oh, that wasn't great. And the instant thought was, oh, what's going to happen to Meta? And Meta did price in a 5% dip after them Google earnings, but clearly it wasn't enough. With Google, you had the likes of the cloud really propping up the business. With Meta, a lot more heavy reliance on them advertising income, and that was absolutely destroyed because of the macro environment that we have out there at the moment. And then to top it off, when we look at these numbers here, there wasn't any pullback into that Meta spend or that Reality Labs. The increase in spend just continued to get hiked up. So you had here a combination where Meta was absolutely killed with the pullback in advertising, and then they were just continually pushing forward into the spend, into the metaverse, and that made for a pretty ugly reading on the income side, on the profit side, which we'll look at in a second. So let's have a look at these numbers and what's going on. So the EPS was a miss, and it was quite a big miss, as you can see here, but the revenue did have a beat. The revenue did decline 4.5% year over year, and you'll actually see here, originally when these numbers actually came out, the shares were up 8%, and then it had a massive swing downwards. So yeah, when you look at that, that's nearly a 29% swing on Meta's share price when these numbers did come out. So let's dig into the press release. You'll see here that the revenue was down, costs and expenses were up 19%, income from operations were down a whopping 46%. Not kidding, when I saw this number, I had to blink a couple of times just to check that was correct. Massive drop in the income from operations. Operating margin was down from 36% down to 20%. And you'll see here provisions for income tax as well was pretty much the same as what it was, or it was a little bit less than what it was a year ago. And that was on income from operations that was half. So you'll see here there was a massive increase in the tax, which you can see here, effective tax rate was from 13% up to 20%. So they had less income. They also had massive expenses increases, and then they were also hit with a higher tax rate to top it off. And that is why we saw the net income decline 52% and diluted earnings per share decline 49%. Now, some positive news here. There was a lot of negative stuff. And this was a very bad quarter from Meta, and I can understand why the share price is getting hit today. But one of the positive standout information here was the user growth. Now, if you flick back to a few quarters ago, there was quite a few people saying Facebook is a dead platform, the users are decreasing, they're only going to continue to decrease going forward. Now, if you actually look at the user growth, we had a 4% in family daily active people. Family monthly active users was up 5%. Facebook users, daily active users was up 3%. And monthly active users was up 2%. So this was actually really impressive because we saw the negativity around Facebook being called a dead platform, but we're still adding. And you've got to remember that the amount of users that Facebook has at the moment, and they're adding still users here. This is fantastic because when we hopefully move into an environment where advertising peaks or comes back a little bit, there's more users to advertise to, and people are still using the platform. So the fundamental story around the social media sites here, this was actually really positive information here. Now, going back onto a bit more of the negative side of it, you'll see here that ad impressions delivered, so the amount they're advertising to people on the platform, increased by 17% year over year. So they're showing more ads, but the problem is the average price per ad decreased 18% year over year. So there is less pricing power at the moment on the advertising, and this is what's happening. We're seeing a massive reduction in advertising. We saw this with Google yesterday. This is what's really hurting the platform at the moment. And I guess the key thing is, from you as an investor, are you attracted to buy Facebook? I guess one of the big stories is that, okay, you've still got a platform that's growing, however, it's having an impact where people are advertising less at the moment. And do you think advertising will recover in the long term? Do you believe this is a short-term issue? Do you believe this is an impact because of the environment that we're in, the state of the economy at the moment? Or do you think this is an impact that's going to happen forever? Personally, for me, I think this is a issue that's a bit short-term. I think advertising will come back, and I think especially the advertising growth they'll have internationally as well is a massive growth driver for them. So I understand the drop here and what's going on, but it was quite a painful drop, worse than Google, but there was still user growth. Now, if you look here, there was a 4% decrease year over year, and if it was for the FX impact, which we're seeing so many companies mention at the moment, if it wasn't for the FX impact, we actually had 2% year over year growth, which still is not that attractive. You know, you compare the likes of Google, they were actually still coming out with double-digit growth when you compare that to an FX impact. With Facebook, it was actually still 2% up year over year. So there's still a bit of an impact, as you can see here at the moment. Now, share repurchases, it would make sense that if your stock has gone from $353 down to, well, today, $101, you would be, if you had a good cash balance, you would be buying back them shares massive amounts. And at the moment, Google is doing that. They are currently, or they did purchase back a 6.5 billion amounts of shares, and you can see here they still have 17.78 billion to buy back on the share repurchase program, which is massive amounts. So that is, I think, somewhere around 5% of the business. So you think about owning this business, when the share buyback is complete, you're actually going to own 5% of this business or more of this business because there's less shares available, so that's good. Now, one of the big increases, as you can see here, is Facebook did not pull back any punches with hiring. Headcount, an increase of 28% year over year. Now, this was a massive impact, and obviously this is what we're going to talk about a little bit more in a second, is the build around the metaverse and reality labs. There was no pullback in the spending in this area, and you can see here that was a massive increase. And especially when you're talking about, you know, your profit being hit, your revenue not really growing, and then you go increase your headcount by 28%, that is a one massive impact on your income right there. Now, they did say they are going to hold back on the spending towards the headcount at the moment, but it's still going to hold around this 2022 level, so there's not going to be much of a reduction here. So a lot of these costs are going to be here to stay on the platform. They also said that Reality Lab expenses are included in our total expense guidance. We do anticipate that Reality Labs operating losses in 2023 will grow significantly year over year. Beyond 2023, we expect to pace Reality Lab investments such that we can achieve our goal of overall company operating income in the long run. So you can see here, there's a lot of expenses going to that Reality Labs, and they're going to continue to spend on that Reality Labs. They're not going to be pulling it at all. And you can see here, research and development was a massive increase from 6 billion to 9 billion. Marketing and sales was flat, as you can see here, and general and admin had a bit of an increase as well. And one thing that I didn't like really was the balance sheet did get slightly weaker in this quarter. You can see here cash and equivalents went from 16 billion down to 14 billion, and you can see here there was an increase of long-term debt as well by 9 billion, and the total liabilities moved from 41 billion to 54 billion. Now, they do still have a very strong cash balance and a strong balance sheet, but this was also a little bit worrying in this report that the balance sheet did take a little bit more of an impact as well. And when we look into the financial performance of the business, you can see here what was worrying about the big spending to Reality Labs for Facebook at the moment is that we went from last year of 558 million revenue in Reality Labs or the metaverse down to 285 million. So there's all this spend at the moment, and I know a lot of this is for the long-term picture, but in the short term, this is showing not much improvement at all, and you can see the Reality Labs cost or losses down here that we had. Now, just some exposure on the Reels, because obviously that's going to be one of the big growth drivers in the long term, and one of the big impacts that Meta has had recently is the launch of TikTok, and we saw the impacts when Snapchat was launched, and now they're trying to combat TikTok, which has taken a bit of market share away from them, and they're trying to combat that with Reels, very much like how they did Stories to compete with Snapchat a few years ago. They said that they are now more than 150 billion Reels played across Facebook and Instagram each day. That's a 50% increase from 6 months ago. So Reels is really starting to improve, which is good. And they also mentioned TikTok directly in this part here, and they said about the monetization. So the thing is that they've launched the monetization in Reels, but the hard thing to get it to what they had previously, because the short video formats are very hard to advertise on, and how do you advertise and monetize them in a very good way? So at the moment, the impact of pushing Reels, obviously they're doing really well, but also means you make less money from them. And you can see here that there's headwind because of the rotation to this Reels platform, but you can see here they're planning to sort this out in the next 12 to 18 months, and it has from the last quarter hit a 1 billion annual run rate, and you can see here now the run rate across these apps is now 3 billion. So they are getting a lot better at monetizing these Reels, obviously not to the level that they should be at or could be at further down the line. The engagement levels on Reels has been very good to combat that threat that they have with TikTok at the moment. So overall, what are my thoughts on these Facebook earnings? Well, they're not great. Obviously, there is been the impact of advertising, and it depends what your feeling is around the advertising spend. Personally, for me, like I said, I think advertising will come back, and the good thing is user growth is coming. But yeah, obviously when you're a platform that heavily relies on advertising, you're going to have a massive impact, especially when you look at them Google earnings the other day. The one thing that I'm a little bit concerned off of these earnings was the massive drop in income, and how much they're still very much pursuing that metaverse. I mean, you've renamed your company Meta, so that's obviously a big sign. But the pursuing of the metaverse, the spending in the metaverse is getting very, very high now. And it's kind of getting to a point of view where it's gone from a point of view where, okay, we're going to, spend a bit of money and see what we can do here. We'll try make another income for ourselves here. We've got a really good cash balance. Let's put it to work. To a point of view where you're going very heavy and very deep on that metaverse, where it's gone from, okay, it's a side bet that is okay if it works out, to a point of view now where it's kind of looking at metaverse and going, it has to work out. The spend on the metaverse is absolutely phenomenal, and it has to be a big bet that does work out right now, which is a big difference from where we were at 12 months ago. And I guess it kind of comes to the point of view where, realistically, if Meta turned around and today and went, you know what, we're actually going to cut metaverse now, that was a crazy idea, we're actually going to cut it, I think like these earnings would have actually been taken quite positively, and I think overnight we'd probably see the share price go from where it is at the moment, $100. I think we would see that shoot back up to $150, $200, because there's so much spend on here, and everyone's like, I don't know if it's going to work out. Personally, for me, I'm looking at it going, I don't know if this metaverse is going to work out. Or a very good idea that I saw earlier that someone talks about is potentially, can we move, the metaverse to a separate business and, give the cash balance to them? Then there you go. And then Facebook probably do well, and everyone that wanted the high risk, spec side of, the Reality Labs could go jump over there, and it would do probably even better if you had the Reality Labs as separate businesses from Facebook. They'd probably both do better than what the share price is doing right now on Facebook or Meta. So my issue at the moment is that I think the legacy part of the business is still okay, given the fact that it is having, a bit of a tough period of time. My issue is the amount of money they're putting into that metaverse, and that was a little bit of a worry for me going into or looking at these earnings reports. But at the same time, then you look at the valuation that it's at right now, and it's a little bit tricky because obviously the income's dropping quite a bit, the free cash flow's dropping quite a bit, and it's quite hard to price Facebook at what it is right now. But I think when you do look at that legacy business, and if it does start coming back, I think that it's still quite a decent valuation here, and if Facebook carry on buying them shares, I still think it's quite a decent valuation here, and I think we should see Facebook, when or if that advertising business comes back, will help lift the share price up. But it's a little bit of a tricky situation where, for me, I look at Facebook and I looked at these earnings and I didn't walk away as confident as with the Google earnings, where I was like, yeah, I think Google, the long-term picture is still very good in the long term, I can buy that. with Meta, I look at that and go, there's a lot of questions around that metaverse and the long-term picture of how that works out for the business. And that made me a bit more nervous. So for me, I think the long-term legacy part of the business is still good with Meta, and that is enough to probably get me buying some shares. But I do have the little concerns about the spend in the metaverse being quite high, and that probably pulls me back as much as what I would normally be if I saw Meta right now and it was just a classic, Facebook business, and I saw that at $100, I'd probably be loading the boat right now. But because I do have them concerns around the metaverse and is it going to be successful and what the spend's going to be, I probably will buy Facebook, but it wouldn't be as much as if it was the business without that metaverse spend at the moment, because that is a lot. So that's where I'm personally at with Meta. Not a great quarter. Still, I think the legacy business is okay, but the metaverse does have me a little bit worried at the moment and probably stops me from buying as much as what I probably would if it was just the complete legacy business. And that's my thoughts on it at the moment. So yeah, a bit of a mixed bag with Facebook. I'll be interested to hear your thoughts in the comment section. What do you think of those earnings? Do you think it's a guaranteed business to still do very well? Do you look at it and think the metaverse is hurting the business a lot? I'd be really interested. This one, Meta, does really split opinions. So I'd be really interested to hear your thoughts in the comment section. But as always, smash the like button if you're new, subscribe, and I'll catch you in a bit.